And welcome back, ladies and gentlemen, and crypto degenerates. We're back here. We were talking last episode about backed and institutional money and all these things, and this episode we're going to talk about KYC. So if this is the first time you're on the show, which I imagine it is because we're completely new here on Crypto HQ, it's myself and the Grand Nagus. Please introduce yourself.
Yeah, I'm the Nagus, Grand Nagus Hoddle at Greedy Ferengi on Twitter.
Yep, and we're doing a lot of in-depth crypto content regarding. Right now, we're doing pieces on regulations and things like that. So I really do recommend, if you guys like this one, to go back and listen to the first one. The first one actually goes into some pretty in-depth topics that aren't discussed very often, and you can get some interesting takes here from people who have a lot more experience, certainly in the markets and legacy financial markets, than most crypto denizens. So this episode we're going to be talking about KYC. So Negus, we left off last time talking about institutional money, and now we're talking about KYC. So you can go ahead and start us off with that.
KYC, it's been sold to us as such a wonderful thing. It isn't really. It isn't really. I'm such a negative bugger, aren't I? I wasn't the last one as well. But no. I'm inherently paranoid, and just because you're paranoid doesn't mean they're not out to get you, as a famous man once said. Anyway, KYC AML, anti-money laundering. Know your customer. In principle, a very good idea and necessary. However, in practice, the way it's being done, I think it's largely being used as a stick to beat people in crypto with. Wouldn't you agree?
Yeah, I think it's a lot bigger than that.
It is a lot bigger, but what the end user sees at first is something he has to comply with. I would even venture to say that it centralizes crypto at the point of trade. We have a decentralized asset being traded, ideally in an ideal world, traded over a decentralized platform like a DEX rather than a KEX. But it's the insertion of centralization. The reason I say that is because there's two parts to it. The beauty of, if you're actually verifying your identity, verifying your address, verifying your passport number and your face, and the fact that you're here now with a little bit of paper saying, this is my KYC application for Binance or Qcoin or whatever it may be at the time. That, to me, echoes the kind of hoops you have to jump through to get a bank account or a loan. Wouldn't you agree?
I agree 100%.
It's the same principle. It's verifying the user, vetting the user. Are you a good person? Shall we let you trade on here, or shall we let you get a bank account? Trading, whatever it might be. So it's inserting vetting and a point of centralization, which is control over the applicant to use a system, as it has been historically with banking, and now it is with exchanges. So it's being used as a stick to beat exchanges with, basically. And there's also the virtue signaling aspect of it. We're KYC AML compliant, anti-terrorist, anti-drugs. I hate to break it to you, pal, but not a lot of drugs are sold in Bitcoin or crypto. Most of them are sold in fiat and always will be. And the second thing is the terrorism excuse for KYC AML is complete and utter garbage. Because most terrorist funding occurs through something called Hawala banking. Have you heard of that? That's Islamic banking. Now, the way it works is, let's say you have, and I worked in the Gulf and a few other Islamic countries and lived there as well. The way Hawala works is, let's say you have Mr. A in country B who wants to transmit money or get a loan from Mr. B in country C, okay? So what he does is he goes to a Hawala agent with his, if he's sending money or applying for money or whatever, if he's sending money, then he deposits a large chunk of cash with that agent, who can cover the liability. That agent then makes a phone call to one in his target country, and then there's another liability, vetted under Islamic law at the far end with Mr. B in country C. That agent then says, okay, you say he's good for it. Yeah, I say he's good for it. That agent in the target country then takes his cash, and gives it to Mr. B. It doesn't transit the international transfer. No funds are exchanged electronically. There are no written records at each point, So there's nothing to track. These are cash transmissions at each point. The money is made up later, through transactions between the agents, but the people who actually want to send the money and the people who actually want to receive it, Mr. A and Mr. B, not the agents, they're not tracked. So you could have an ISIS guy in one country, goes to an agent, to send to an ISIS guy in another country, who goes to an agent. Only the agents are traced, and they're squeaky clean. They're vetted. They're credit checked. So 90%, 95% of terrorist money or drug dealer money uses a similar system. So how can you... So what the hell use is KYC AML? It's useless for criminal money. It's absolutely useless. It doesn't achieve anything because it's completely bypassed, because nothing is transmitted over banking systems. Nothing at all that identifies the transmitter or the recipient, whether it's a loan or a money transfer, whatever it might be.
I also think it's...
So what is it useful for? That's what I want to know. What possible purpose? And in any case, if it was useful, then surely the way to do KYC AML would be to... sorry, that was my phone. Would be to transmit, say, a minimum of data. The data will be custodially locked and encrypted, and the metadata would be hashed. And then that data, they would have to request, law enforcement in each country would have to get, say, a court order identifying that transfer or the user and seek confirmation of that one record, of that one user. But that's not what we've got. What we have, in order for a KEX to operate in most countries now, with KYC AML regulation, is the exchanges have to hoover up the data. Every single person has to be compliant, So they're hoovering up all the data on every user. They're hoovering up all the metadata as well. And then what happens in the UK? What happens in the US? There is a blank metadata and user dump to the tax authorities and the government. They don't pull individual records with legal requests. They just take it all. They scoop it periodically on time, say monthly or whatever. They're required to hand it over. Now, how is that preventing terrorism? That's just a data dump to the authorities. That's a completely different thing. That's a data troll, wouldn't you say?
Yep.
That's not how it should work. And yet that is how it works with exchanges. Now, that tells me that this is not really about drugs or terrorism or fraud. This is about finding out who's doing what, how much, and when. This is about inserting, this is about creating, in a way, another layer of the panopticon. You're aware of the panopticon, the concept?
Yes.
The prison? Yeah.
Our viewers might not know what that is, though.
Our viewers, basically, it's a concept that was posited many years back of the perfect prison, in, say, a totalitarian state where you had, it would be a circular, thin building with cells on the inside of the walls, and the inside walls of the cells would be transparent, So you could see what everybody was doing all around you. Now, the central guard post is this massive glass tower, which faces in all directions to those transparent walls. So basically, whoever's in the tower can see what everybody's doing in every direction, in every cell, at all times. And if you think about all the surveillance we have now and everything, then this is just another piece of the panopticon. Now they can see our crypto transactions as well.
Right.
So it's a stick to beat exchanges with in terms of licensing, and it's also a stick to insert another centralized point of control, under the pretext of, terrorism bad, drugs bad. And, the exchanges don't really have any choice, so they think, well, we might as well virtue signal as well. It's not as shit, we don't have a choice, we have to do it, otherwise we can't operate.
Right.
So they use it to gain brownie points as well from gullible people.
I think it's definitely worth mentioning that when people don't know this because they got into crypto in 2018, most of them 2017, but even before that, there was a transition period where we went from even exchanges like Poloniex, where yes, they were centralized, they didn't have KYC.
No, they didn't. Nor did Binance when it started.
Exactly. You just needed an email address and you were good to go. And what has happened since then is we've had companies like Circle purchasing Poloniex. We've had KYC start being enabled on sites like Bittrex. KYC is par for the course now for almost every single exchange. And one of the things that people didn't notice that I picked up on, if you remember, you and I were actually working on this a while ago with someone else. We were thinking of doing chain analysis. But there's actually a company called Chain Analysis, and what they do is they will look for, you know who I'm referring to,
the rubber glove and lube company.
But they will look for. They partner up with these exchanges, and these exchanges have names tied to addresses. So as soon as they get a name tied to an address, that goes into their database, and they start building these massive trees, these huge databases of connected accounts, this big web. It's almost like the PGP web of trust concept, except this is the web of we know where your money is and who controls your money and who you're dealing with.
In other words, the web of no trust.
Exactly. And so Binance actually announced a partnership with Chain Analysis as of, I think, 2 months ago.
Yeah.
And they're doing this for law enforcement. Obviously, we see Binance US being a thing. And all of this just screams that crypto is becoming more and more monitored, surveilled. People are no longer able to create an account unless they have all of this crazy KYC. And once they have your KYC, now they can get you on every single exchange, because there's very few exchanges that will allow you to move more than, say, I don't know, $5,000 a day without KYC. So it's one of those things that I don't think people have really noticed, because they don't really understand what chain analysis is. It's probably one of the more insidious things.
You know what the best thing about it is?
Yeah.
The exchanges sign contracts with companies like Chain Analysis. But if you look at the people they also do business who aren't exchanges with, the law enforcement authorities actually do business with them as well.
Oh, yeah, directly. Yep.
Large amounts of business. And such that it is, what they can do is they don't actually, as I said, they don't submit any of their requests with, court orders or warrants or anything like that. It's just, right, okay, we've got a contract with you. We can pull, I don't know, exabytes or terabytes of information every month. And periodically they just pull it all. Yeah? Mm-hmm. According to what they're paying Chain Analysis for. It's a pure business transaction. There's no legalities involved at all. So they've just taken your data, traced everything you have, and then sold it.
It's very Cambridge Analytica.
Exactly. Well, it's even worse because it's your money as well as your data.
Yeah.
It's disgusting. And a lot of the regulation in the West is going that way now. It really is. Which is one of the reasons, when I make my get the hell come back.
You would think with the way that KYC works, and this is actually, there's a really great blockchain analogy for this, where you have the entire world doing all of this proof of work, verifying a transaction of you purchasing an ice cream when you don't actually need to do that. The only reason that is a thing in Bitcoin is because we apply all of this. We reduce all of our efficiency because we want to make sure there's no frauds. But actually, you should have as little work as possible on these transactions and only invoke all of that proof of work on fraudulent transactions. So It's the same thing with KYC, where instead of having this blanket amount of work being put into collecting all of this data, it should really only be a thing when there is actual suspicion of fraud.
I know it should, but that's not the intent. That's not why they're doing it.
Yeah.
Otherwise, it would have been put in place that way. But now it's basically a strong arm. You give us all your data, Mr. Exchange, Binance US. Otherwise, you don't get a license to work here. And it's going like that. I mean, I wrote that article about ICO regulation and the rest of it last year, that was on your site. And it's funny the way it's going, because I think the future countries that actually will succeed in this industry are the ones that have two things. I mean, friendly, obviously, is great, but just as important, I think, is consistent regulation, and fair.
Right.
It has to be consistent. You have the hostile approach, China, God knows how many times it's banned Bitcoin and failed miserably. And as we know from watching the China hustle and other things, Chinese people still find lots of ways to get their money out, utilize it, and they always will. The hostile approach doesn't really work. It's the same approach as the drugs war and the torrent war and the piracy war and the rest of it. And it seems like these people haven't learned the lessons of 1905 and 1917 in Russia, which is autocratic rule breeds rebellion. You just drive it in underground, as it were. But even worse than hostile is inconsistent. Yeah, you have places like Switzerland and Gibraltar and Malta who are trying to be consistent in their legislation for business and for visa and for business licenses and for operating licenses and for blockchain-friendly legislation and for educational resources, to train up lots of people to work in crypto in that host country. And Switzerland's, by the way, far out ahead of them, I think. But that's because of historical considerations. But then you have the US, which is, God, it's horrendous. You have certain states where you can pay your taxes in Bitcoin. Yeah? Nice and friendly, you'd think. You have other states which you can put ATMs in your shop. You can license your business to trade, pay in Litecoin or Bitcoin. For example, you have friendly company registrations in Wyoming. And then in contrast to that, you have federal licensing requirements for crypto businesses covering 45 states, which are completely hostile. Yeah. And in contrast to that, you have the IRS's approach to transaction tax, hostile. In contrast to that, you have the blanket, trawling of data on KYC, AML, and the restriction of business licenses.
And then you also have the SEC talking about securities.
Oh, for God's sake, that was pathetic. You cannot base that argument on the 1936 Howey test. That's like trying to analyze a Bugatti Veyron, in similar terms to a Model T. I mean, come on. Then the basic mechanics are the same, but the analogies are no, it just doesn't work.
Right.
It really doesn't. As we saw. Well, the SEC are a bunch of fossils anyway. For the most part, they don't.
So, what do you think moving forward? Then, what do you think all of the KYC? Because it's so much more effective in crypto because of the way the addresses work.
Yeah, it is in a way.
Well, this is why the terrorists use...
My only strategy for beating it is to basically get your coin off the exchanges, shuffle it around a little bit, and then convert it into Monero and sell the bug. I don't know. If it works, don't knock it. Why not?
You've heard it, folks. We're mega bullish.
But consider it... That's one method, sorry. But you've got to find some way of doing it, whether it's offshore or whatever, because this is ridiculous. You can't do it. The whole point is having control of your own. The whole point is decentralized and trustless systems and not being a part of this centralized panopticon that, sticks its torch up your backside with a rubber glove and lube every day, every single by what you watch, what you see, what you're told. What your medical problems are, your bills. That's the whole point. It's empowering and freeing people. Yeah, making a wodge of money as well is nice, but it's a liberating technology. And if you buy into this whole virtue signaling crap about KYC AML, more fool you. But if you actually study how it's being implemented, then you will basically see that it's just yet another insertion of centralization.
I also feel a certain way about
better control. It's a break and a bottleneck and a big snooping eye on what everybody's doing. Not just from the point of taxation. Taxation is just a part of it, I think.
Yeah.
Again, it's about control.
Yeah, I also have my reservations about all of these. So if you the way the KYC works in the real world is you have an account and it's under your name. The way it works in crypto is only by association. You have this Binance account, and money was sent from this Binance account to this Ethereum address. But we don't this Ethereum address isn't under anyone's name. But we as the government, because it was associated with this address, we can say it's your money. You can't, like, I have an issue with that. You can't really say that. What if it's your friend's account? What if it's, what if you wanted to make a payment or something?
There is another way as well. Sorry, viewers, basically. Get some software wallets and don't use them. And then when you do want to cash out, use those because they can't point towards you because the address hasn't popped up before. Sorry, another tip there.
There it is.
Does work.
Grand Neg is giving you security tips.
Oh, and always use a VPN. Always use a VPN.
Always wear your condom.
Yeah. No glove, no love. No glove, no gains either. Yeah. But yeah, that's... I think the whole thing is a red herring. It really is. And it is being used as a stick to beat us with. And inconsistent regulation, you have the banks pulling one way, you have business and state and federal authorities or government authorities in other countries pulling another way. You have changes in taxation law. For example, until recently in the UK, it was taxed as value-added tax when you converted it into fiat. And if you didn't convert it into fiat, then there was no tax, because it's not classified as an asset. Now, the law has changed that it's counted as a capital gains asset and liable to 40% instead of 20% without even being cashed out, which is insane. That is totally insane. But the good news is they have no method for it. So basically, because of Brexit, they're still asleep at the wheel, which is nice to see.
Yeah, the reception that I've, even personally, because when I do business, so I'll give a personal example. We were in Singapore, and we were signing up to do we created our entity and all that, and we were doing a bank account there. We were capitalizing it. And they had asked, because of the way that all this KYC works in the last few years, is you want a bank account with us, now you have to provide us your resume to open a bank account and give them money. We have to give them a resume. We have to give them, our business objectives, our entire business plan, our presentation. It's so much data that they want, and they want it all. And at the end of it, because I'm an angel investor in crypto companies, they denied our bank account.
Yeah,
this is a Singapore bank. Singapore is the financial center for crypto for the most part, and they denied us. And so it's everywhere that this is happening. They're collecting all this KYC and AML, and crypto people are being left out in the cold.
Yeah, it's the same. A crypto business in the UK still can't get a bank account for the most part if you declare it.
Yeah.
It's the same in the EU, apart from a few countries. If you declare that you're in Germany not in Germany, no. There are a couple of banks in Germany that will do it. Fidor Bank will do it. There's another one. Can't quite remember the name of. But France, it's true. Holland, it's true. Belgium, a few others as well. If you say you're a blockchain business or a crypto investor or a crypto company, you will not get a bank account for your company. The bank will just drop you like, a radioactive piece of dog poo or something. They won't want to touch you.
Right.
And it's true. They want basically see what we're doing and tax what we're doing and not give us the means to build businesses either.
Yeah. It's extremely hard.
I don't know. You might see it as a double whammy, but in reality, it's not really a double whammy. It's more a case of inconsistency because there are certain parties in the governments that actually want people to open blockchain businesses and want crypto investors to cash out and reinvest their money in real businesses, that'll benefit the population and increase the tax base, etc. But banks only see a threat to their control, so they're blocking it at their end. It's happening in many countries, regardless of what policy is. So what you have are inconsistent environments, which aren't really going to improve anytime. They're not really going to improve anytime soon because you have different interest groups, the banking group and the government group and the growing new businesses group and whatever. They're all pulling in different directions, and it's kind of a handbag fight.
Yeah.
And we seem to be caught in the middle.
Yeah, there's
in
also,
many of these.
it's also like you were mentioning with the UK. There's no real specification or information on what actually constitutes taxable events, how much tax you need to pay. It's completely different depending on however people feel at the time.
Yeah, and it changes depending on who's in the committee in particular.
Yeah. So I've seen a taxable event range from you invest in an ICO to you transfer money to your own Ethereum address. That is now a taxable event.
No, it's not. Yeah, it's my money going to my address. So that's the equivalent of me putting, €100. Why is that a taxable event if I'm taking it from my piggy bank and putting it in my wallet?
Yeah. So
that's insane.
It's all over the place, and it's all up to the whim of whoever happens to be auditing you at the time, and how much they want to screw you over. And it's just silly.
Yeah, it is absolutely bonkers.
It's like trying to retrofit. So crypto is so much better and it's so much newer that this new technology is trying to fit the old legacy system, which clearly doesn't work because, like I said, you can't.
But the problem is as well as into the legacy systems, because that's their only frame of reference. Yeah. Yeah. They have no understanding of the technology. They have no understanding. Well, they do understand the potentials, in terms of disintermediation. But what we have here is people who have knee-jerk emotional and subconscious reactions that are kind of a combination of rabbit in the headlights, completely frozen, and terrified, and then running around like a screaming epileptic with their hair on fire, or jumping up and down and throwing grenades at everybody. Yep. It's a combination of all those factors at the same time. Yeah. Yep. And if you see all three of those in the mix from different parties within a country or a government, it's, apart from certain countries who are being consistent about it, like Malta or Gibraltar or Switzerland, even Liechtenstein and other places, for the most part, it's like this, to a greater or lesser degree. It really is. And
that they also don't even really understand it either, because when it comes down to the granular, even if you're transferring money from your Ethereum address to another one, that's a taxable event. They themselves don't understand the way the UTXO model works. They think Bitcoin is account based. Technically, if they actually understood how it worked, they could actually tax all of the change you get back from all of your Bitcoin transactions whenever you pay someone. But they don't know how that works. So it's obvious there that there's no understanding really of the technology there. And,
not really, and there won't be anytime soon. I mean, as I know when I worked in IT, governments don't do IT very well. I did they're absolutely hopeless. Hopeless doesn't even begin to describe it. Any aspect of IT, every decision is taken by committee, and every committee decision is then reviewed by another committee. Yeah,
which is then outsourced.
So the time cycle is horrendous. Meanwhile, they're not learning about the technology because they're too caught in committee, which is why most of them are asleep at the wheel or engaging in knee-jerk reactions. Which, use a VPN, folks. Stay ahead of them. We always will.
In conclusion, abolish the government, and taxes are a scam.
Yeah, watch the end of V for Vendetta. That puts me in a good mood when I think of governments.
Yeah. When are we going to blow up Parliament building?
Soon, hopefully. Might as well. They're not doing anything, are they?
Yeah. You know the one thing that actually would help in the next election cycle? Tactical nuclear weapons.
Yeah. Definitely.
There it is. Anyway, we're going to wrap this episode up on KYC. I'm not sure what we're going to do the third episode on. Probably something semi-related.
We'll have a think about it.
Yeah, but let us know what you guys thought of that. Leave us your comments. And remember, tax is definitely theft. Thanks.
Mm-hmm. Thank you.
Bye, guys.
Bye-bye.